What's up, ladies and gentlemen? This is Chris coming to you from Story Traders, where we try to bring you 5 to 10 minute videos daily to help you trade more effectively and more consistently so you have more green days than red. Now, today we're going to be covering 3 things to know before you start using real money. Now, we only got 5 to 10 minutes, so let's jump right in. Number 1, minimize the variables in your trading. Now, I don't know about you, but this looks extremely complicated to me, and it's actually taken off the web, and supposedly it's describing the physics of the universe. This is way over my head. To kind of compare this to what you might see in the trading world, it'd be the equivalent of using a ton of different indicators, drawing a ton of lines. This is kind of the stuff that people that absolutely never trade would kind of walk over and be like, yeah, this guy or girl knows exactly nothing about trading. And as you can see, it's just kind of all over the place. You're not really sure what's going on. I trade and I don't even know what's going on here. There's just way too much going on. So what we want to do is we want to minimize the variables. So something like this is way easier to follow. 1 plus A equals 2. What is that? Well, 1 plus 1 equals 2. Simple addition is easy to follow. Multiplication a little harder. This mess, good luck. So what we want to do is we want to minimize the variables in your trading, because when you start with one variable, then you can understand how that variable or that specific indicator operates and performs. So then over time, you can start to use more indicators. So you start small, and then from there you can start to play with more variables. But in the beginning, keep it simple. Here's kind of a representation of exactly that. I know we've all heard buy low, sell high. And this is simply put in just looking at support and resistance. When the price goes low, it seems to hit that bottom line. So that could be a potential good entry point. And then at the top, that next white line, it looks like it hits that pretty consistently and then comes back down. So a very simple strategy here: buy low, sell high. One thing you're looking at, price action, and it's easier to follow. Number 2, choose one strategy to test. So a lot of times people are bouncing all over the place. They hear people doing different types of strategies, and they think if they don't do them all at once, they're missing out. Again, you want to minimize the variables. So here, to help with that, you want to pick one strategy to test. And the main strategies that are for trading is scalp trading, day trading, momentum trading, swing trading, and position trading. Now, scalp trading, I do not recommend this for beginners. The reason is it's capitalizing on moves that happen in sometimes just seconds or at most a few minutes. It sounds exciting, and it obviously would get your dopamine pumping, but it's similar to kind of like gambling if you don't know what you're doing and you're not a seasoned trader. Give you perspective. You think everything's going the way you want, and then all of a sudden, boom, you're getting burnt, and you thought you were the one doing the scalping, but actually you're the one getting scalped. So for newbies, I would say stay away from this. You can read about it, but for now, I would definitely recommend focusing on some of the other ones. Day trading. This one's often glamorized a lot in the news or in writing publications online because it's an easy, potentially an easy way to make money because you're entering and exiting the same day. So people want to get rich quick, and they kind of play to that in those publications. So if you're a newbie, this is going to be kind of positions that would literally be closed within the span of a day. In the stock market, you'll have a window of time where you can buy and sell because the market opens and closes. If you're trading in something like cryptocurrency, you don't have that structure of at least a time frame of when you have to enter and exit for a day trade. But again, this is a little more risky. You're trying to capitalize on a shorter term move. And number 3, momentum trading is literally just that. When there's momentum and volumes coming in and pushing an asset, if you will, up, it's trying to capitalize as much as possible on that momentum. Now this is usually a little longer. It can still be within the span of a day. It could be a few hours, or it could last a few days. Normally when you're starting off, it's best to focus on a little longer term, stronger patterns, if you will, because they're over longer periods of time. Swing trading, it kind of sounds exactly like that. You're riding and watching it go down, and then you're trying to capitalize on the up move. This would take a few days usually. Usually 1 to 7 days is kind of like the range that you're looking at. But this is a little slower, a little more relaxed, if you will. You're looking for bigger moves. And if it happens on a bigger time frame, it's usually a stronger move instead of something that's just happening within a few seconds or minutes like a scalp trade. And last but not least, position trading. Now this one is when you take an actual position and you're planning to hold it for the long term. So this can sometimes be weeks, it can sometimes be months. If you see a major pivot potentially happening in the market, you could enter a position and just hold it. Or if you really like the fundamentals and the technicals of one of these assets, say it's an Apple stock, and you recognize that for you it looks like it's at a good price, you might not want to capitalize on a quick 2% gain that happens within a day. You might want to ride it out for a few months because you think there's a lot that could happen in a positive way over a longer period of time. And because it's, in this example, a credible company, you might be more comfortable taking that position and holding it over a longer period of time. Number 3, have a consistent win rate on paper. So this goes back to another episode we were talking about paper trading, and this one specifically before you use cash, it's important to always have a consistent win rate on paper before you start using real money. Because going back to number 1, you want to minimize variables. Once you start using real money, you're introducing a very, very important variable, which is emotion, because you're going to be using your real money. And as good as you might think you're going to be at managing emotions, it's always going to be slightly different than practice. So we at least want to get the other things down with the studying and understanding how to structure having successful trades before we have to introduce these other variables that will affect your trading. So have a consistent win rate on paper. And how do you do that? We stick to an acronym called PAR, or Plan, Act, and Review. So what we want to do is we want to plan out a strategy that we choose. We want to really understand what's going to happen. Then we want to act on that strategy. We actually want to follow through, and we want to stick to what we plan, because if you deviate from your plan, then you can't have a realistic review process. You want to have consistency throughout the plan, act, and review stage, so your data is not skewed. So when you're looking back, it's easier, it's more consistent to really understand, was this a good trade? It just happened to not work out this time, or did I introduce an extra variable that wasn't needed there because I decided to step away from the original plan and acted on a different impulse, if you will. And to simplify the 3 points again: 1, minimize your variables. 2, choose one strategy to test. And 3, have a consistent win rate on paper, and you can do that by following PAR, which is Plan, Act, and Review. And we'll end on a quote: if you can't explain it simply, you don't understand it well enough. Hopefully today I was able to explain it simply to you guys how to trade effectively on paper before you start using real money. Now the question I have though is to you guys: how do you keep your trade simple? If you could just put it down in the comment section below, I'd love to have an open discussion on that so we can help each other. And if you have any other questions, feel free to leave it in the comments section as well. And if you haven't had a chance yet, make sure to hit that subscribe button if you want to be up to date on 5 to 10 minute videos that I'm going to be putting out on a daily basis. My name is Chris, and this is Story Traders, and I look forward to seeing you next time.